My name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A bearish closing black Mariposa on Friday and also a second bearish black crow. However, it was a follow-on lower to last Thursday's combined key reversal down and bearish double that Friday's action was notable for. Friday was also the second consecutive close below the 2020 low at 106.35. However, prices did not manage to test the next support below that, the April 2017 low at 105.68, shying away at the last moment. Below that, we have the significant February and March 2017 low at 104.92. Prices are still sitting patiently above the top of the previously influential upper time, currently at 103.98, with the broken January to May 2021 bearish Andrews pitchfork, which increases the question about its future. You see, I would normally retire such a pitchfork after two consecutive closes over or under it. But in this case, I've made an exception, not just because of it becoming possibly support, but also for two other reasons. Firstly, the pitchfork has been broken many times on the lower time, currently at 96.57, yet each time it has repaired itself. Secondly, because of its long lifespan, over a year and a half, I think there may be perhaps more to give from this pitchfork, so I'll keep it on here for a little while yet. Last week's rally managed to reach up to the April 2020 low at 107.25, but stopped short of reaching target X3 at 107.65, the secondary harder to reach target for the late September to mid-November ascending wedge pattern. This pattern is highlighted in dark blue on my daily chart. Now, so far today, a reactionary move back up with a slightly higher open and a lower low, but testing up to the 2020 low again and looking like an immediate countering bullish double right now. Cable, aka sterling against the US dollar. A lower but indecisive spinning top on Friday, though it was, I suppose, a reasonable follow-on lower to the previous session's bearish opening long white Mariposa and bearish engulfing bearish opening long black Mariposa and bearish opening and bearish engulfing pattern. The market ended up on Friday just under the Fibonacci and other congestion at the 121.50 area, though, and this is the interesting bit, the market was very shy of trying down to the combination of slowly declining long moving average, currently 120.84, and the May 2020 low at 120.73. Above we have the June 2020 low at 122.48 and the 50% Fibonacci line of the June 2021 to September 2022 move at 123.16. The late September to late November ascending wedge pattern, currently 118.34 to 120.08, is still the relevant pattern influencing the market here. I've highlighted the trend lines in this pattern in dark blue to help visualize what is going on. Prices last week managed to reach the primary target X2 for this pattern in the 124.20 area, though we still have open the secondary harder to reach target X3 in the 128 even area. So far today, a reactionary move higher over the Fibonacci and other congestion at 121.50 and up to testing the June 2020 low at 122.48, but no more than that at the moment. Euro sterling. An indecisive spinning top on Friday, reaching up to new highs not seen since mid-November, but ultimately closing lower than the previous session and just under the April 2021 high at 87.19. However, that wasn't the main feature, as last week ended up being a weekly key reversal up, with prices based that week just over the long moving average below, currently 85.56 for a third consecutive week, and moving up and closing over the rising medium moving average, currently 86.47, the April 2020 low at 86.69, and the flatlining short medium moving average, currently 86.78. Above the April 2021 high at 87.19, we have some fairly clear air up to the peak of the old November roof pattern at the 50% Fibonacci line of the March 2020 to March 2022 move at 85.51. But I suspect we would need some solid closes over the April 2021 high to generate such a move higher. Well, so far today, a lower open and test up over the April 2021 high, but the market feels uncomfortable up there and has dipped back below towards the April 2020 low, though looking like an indecisive spinning top right now. US dollar against the Indian rupee. A bearish dark cloud cover pattern type on Friday as the market continues its slog along the underside of the middle time, currently 82.99, of the mid-September to mid-November bullish shift pitchfork. You can see the tines highlighted in bright red on my daily chart. Below we now have support from the rising short medium moving average, currently 82.03, which interestingly late last week made a golden cross with the short moving average, currently 82.07. Further down we have some interesting support from the open and close area around 81.90. Prices are now slowly approaching the mid-October all-time high at 83.26. The middle time will intersect with this high next week. So far today, a lower open and a short move down which has not really followed through as yet. It is below last Friday's range but not last Thursday's. US dollar against the Brazilian real. An interesting though indecisive doji cross on Friday for short tongue on top that was, interestingly, capped by the late June to late September mildly bearish shift pitchfork, the one I have had doubts about prior to this commentary. Meanwhile, the long move tail below was based on the largely sideways moving short medium moving average, currently 526.55. That's just below the 50% Fibonacci line of the May 2020 to April 2022 move at 527.37. As I've previously often mentioned, this 50% Fibonacci line is not that good looking a support, with better below at the combination of the flatlining medium moving average, currently 523.04, and the 50% Fibonacci on the good looking March 2021 to April 2022 move at 522.76. Overall, we've had 2 weeks of slowly moving higher prices, though we're still within the weekly key reversal down made 3 weeks ago. US dollar against the Mexican peso. An interesting past week that finished up on Friday with an indecisive spinning top that saw its long tongue on top capped by the declining medium moving average, currently 1984.58, for the fourth time that week. Meanwhile, the base was on the April low at 1971.68, though I suspect better support was a little below from the declining short medium moving average, currently 1966.83, and the nearby middle time, currently 1965.09, of the March to May bearish shift pitchfork, the one highlighted in dark blue on my daily chart. Overall, I'm still pondering as to whether the action since late September, including the time crossover seen in late October, maybe, just maybe, a possible bump and run reversal bottom. Additionally, and this lines up with the possible bump and run reversal bottom idea, is whether the action over the last 3 weeks is a topping action of sorts or a possible bull flag. I need to think some more on this, on all of this. Now, so far today, a move lower to the April low, but halting there right now. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.